Nigerian inflation slowed in January 2026, providing room for policymakers to resume their rate cutting cycle next week. Analysts had been divided on how the inflation print will move. In January, the Nigeria headline inflation rate dropped to 15.10%, slightly down from 15.15% in December 2025, a decrease of 0.05%. Compared to January 2025, the year-on-year headline inflation rate was 12.51% lower. It was 27.61% in January 2025, indicating an overall decline over the year. On a month-to-month basis, the headline inflation rate for January was minus 2.88%, which is 3.42% less than December's 2025's 0.54%. This shows that price increases slowed down in January compared to December. The slowdown was driven largely by lower food prices, including staples like cooking oil, grains, and legumes, which helped offset still elevated underlying inflation. The food inflation rate in January 2026 stood at 8.89% year-on-year, a drop of 20.73 percentage points from January 2025's 29.63%. Month to month, the food inflation rate in January 2026 was minus 6.02%, decreasing by 5.66% compared to December 2025's minus 0.36%. Core inflation, which excludes volatile agriculture and energy prices, was 17.72% year-on-year in January 2026, a decrease from 25.27% in January 2025. Month on month, it dropped to minus 1.69% in January 2026 from 0.58% in December 2025. The 12-month average annual rate was 22.84%, 4.4 points lower than January 2025's 27.24%. Given still tepid growth data, it would be good for the central bank to signal a positive economic stance and confirmation of economic progress, stability with a 50 basis points cut, given that interest rates are still high for business operators. Otunba Opeyemi, Agbaje, Economist and Chairman of the National Pension Commission, PenCom, comments on the implications of the inflation print.
Looking at the January 2026 Consumer Price Inflation Index, otherwise called inflation data, it would seem like usually economic data, especially inflation in recent times, we've seen progress, but we've also seen some causes for concern. Maybe at some time we say, okay, the food inflation figures are not so good, or the month-on-month figures are not so good, meaning there is some short-term inflationary risks. At other times, there's been a lot of good news, but there's always been some caution. January 2026 looks like the first month in which everything looks like unmitigated progress. The month-on-month data is particularly noteworthy, showing that prices are actually falling. So month-on-month headline inflation minus 2.88%, which means that the government can really celebrate the conquest of inflation, the taming of inflation. Not just that the rate of increase is declining, but now the prices may now actually be declining. The food inflation data is also remarkable. I mean, unequivocally demonstrating that food prices are falling. Of course, headline inflation has declined also. That's the top figure that we read as inflation. Falling year on year, month on month. So there's if I am to pick out some caution in this data, it will not come directly from this data, but if we now juxtapose this data with the purchasing managers index PMI data that have been released by both the CBN and the S&P Stanbic IBTC PMI index. If you focus on the Stanbic IBTC, which is much more negative than the CBN data, then it is possible to begin to express concern about the drivers of the reduction in inflation. That could it be a weakening economy? Could it be weak demand? Could it be that people are not able to purchase and therefore prices are falling, which could be a not too positive economic signal? That's the only way you could interpret the data we are getting and be concerned. And it's a perspective that is worth examining. So now there's no doubt that inflation, in the inflation front, the economy is doing very well. Inflation is low, or in some cases prices are actually falling, especially with relation to food. And these are visible phenomena. People can see them, people can attest to them, and therefore, but the question then is now about growth and demand. Is there a concern about economic growth? Might growth be weakening? Against the background of a very positive growth data in Q1 to Q3 2025, that doesn't look very probable, but would be a cause for concern if that is what we do see. So on the inflation front, high marks to the central bank and to the president and to the administration generally. And then we now begin to watch what is happening on the growth versus demand front.
Hello, this is Global Business Insights, where we look at the world from a business perspective and bring you news, views, and analysis that helps to bring you up to date on the context. To other stories, Japan's economy grew 0.1% in the fourth quarter of 2025, avoiding 2 quarters of contraction and a technical recession. This reversed the third quarter 0.7% decline, but fell short of economists' forecast for 0.4% growth. On an annualized basis, output rose 0.2%, compared with forecasts of 1.6%, also following a 2.3% decline in the previous quarter. On more data, the euro to pound sterling traded lower as Eurozone industrial production on a seasonally adjusted monthly basis contracted by 1.4% in December, slightly better than the minus 1.5% forecast, but sharply lower than the 0.3% expansion recorded previously, which was revised down from 0.7%. Europe's policymakers have been concerned on how to improve the European Union's competitiveness. One plan set to be in the cards could be to give the European Commission a mandate to propose reforms to capital and energy markets to address ease of doing business and attract investment. Another suggestion is to add Buy European clauses to a bill expected to be revealed next week, also designed to further support industries in the bloc. ByteDance, the company that owns TikTok, has promised to limit the use of its AI video tool after Disney and other entertainment companies threatened legal action. Social media has recently seen a surge of clips featuring Marvel superheroes and other Disney characters. Disney's legal team accused ByteDance of a virtual smash and grab. According to the media reports, ByteDance responded by pledging to strengthen current safeguards, although it did not share specific details. Volkswagen has joined the group of large multinationals seeking drastic cost cuts. Volkswagen say they plan to cut costs by 20% across all brands by the end of 2028. The German automaker looks to shore up its finances to counter the impact of higher costs, a tough Chinese market, and of course also the impact of US tariffs. According to media reports, CEO Oliver Bloom and finance chief Arno Antilts recently presented a massive savings plan at a closed-door meeting with the company's top executives in Berlin. That was in mid-January. The World Bank has reduced by nearly 2/3 the amount it intended to help Kenya secure from commercial lenders for the country's housing and land reform initiatives. Commercial lenders are now expected to contribute $360 million, down from the previous target of $900 million, according to the latest disclosures from the World Bank. Altogether, the institution will assist Kenya in raising $910.3 million, which is less than the originally anticipated $1.35 billion. Isfandia Khan, the lead financial sector specialist at World Bank on Kenya, says this adjustment does not reflect a cut in the project's overall cost, but rather the estimated private capital mobilized under the program, adding that all figures remain subject to change until the World Bank board formally approves any project. Oil prices remain stable today as investors consider the potential impact of forthcoming US-Iran negotiations intended to ease tensions amid anticipated increases in OPEC Plus supply. Brent crude futures rose 0.2%, reaching $67.86 per barrel by midday GMT. Well, that's it on this special edition of Global Business Insights. This is Bode Oshosami. Please do not forget to subscribe and hit the notification button. Thanks for watching. Bye-bye.